Hello and welcome to Mutual Fund Guide. It's all about your funds and your returns. I'm Muralidhar Swaminathan. Investing in mutual funds is simpler and easier today, but choosing a scheme may not be. There are a large number of schemes to choose from, but more importantly, 2018 could be different from 2017. Your fund's performance will depend on how the markets perform, so we need to keep an eye on the markets. Can we see the same kind of returns going forward in 2018? That's a big question. We'll keep asking and discussing with our guests. Even on the fixed income side, interest rates are rising. Money is no longer cheap, so investing may not be the same. We have with us two experts who have done extensive analysis to help viewers choose mutual fund schemes for 2018. Hemant Rustagi and Vidya Bala. Welcome to the show. Hemant, how is it going to be in 2018? Is it going to be the same? What are your equity funds that you would look at?
Well, Murali, my belief is that equity market will continue to do well, but I think somewhere investors have to moderate their expectations. I don't really think that the equity funds are going to give the kind of return they're given in 2017. But, it's not only always about return, it's always about asset allocation.
Absolutely.
Because you're not investing for a year or two, you're investing for longer term. So as long as you're very clear about your time horizon that you're investing for longer term, I don't think you really need to worry about how much return I'm going to get in a year, because it's a proven fact that in the long run, equities will give you much better return than any other asset class.
Absolutely. Vidya, I will, before I come to you, I'll read out the list of funds chosen by both of you. Vidya has chosen from the large caps, Franklin India Blue Chip, ICICI Pru Focus Blue Chip Equity Fund, Mirae Asset India Opportunities, Invesco India Growth. And Hemant, you have a list of 5 large cap funds, Reliance Top 200, Kotak Select Focus Fund Regular Plan, Mirae Asset India Opportunities Fund, ICICI Pru Focus Blue Chip Equity Fund and HDFC Equity Fund. Mirae Asset is a common scheme both of you have recommended. Vidya, I'll come to you first on Mirae Asset India Opportunities. Why is Mirae, I don't think it's a very large fund, but still you've focused on this fund. Why?
Yeah. So Mirae Asset India Opportunities is one of those funds that was launched when most people lost faith in the market. That was in 2008. And since then, the fund has been extremely prudent in terms of maintaining consistency in performance. So the biggest drawback with many equity funds is that they're chart toppers in some years and then they go down the third or fourth quartile in other years. The biggest advantage of this fund is consistent performance over several years now by remaining not just in the top quartile but by also beating its category average and benchmark consistently. The other reason why we like the fund is its choice of stocks and sectors. While many funds try to ride a rally after they see it, Mirae has been quite perceptive in terms of getting its sector and stock calls right a little ahead of the market. For instance, it got its automobile call way ahead of other funds entering the stocks in this sector. It entered consumer sector a little ahead and made good returns and then went underweight on it. It entered construction sector, proxy plays to construction a little ahead and also delivered returns. So,
right. In the current portfolio, do you see any interesting themes? That's something that they have identified, something that's new from 2018 it could take off. Will it be a kind of a multi-bagger compared to, say, other large cap funds?
No. See, most of the stocks in the overall broad universe have run up. So to get multi-baggers are going to be very difficult. But if you are looking at stocks with, superior earnings growth and superior return on equity, chances are that you will beat the market. You may not have multi-baggers, but you will beat the market. In that sense, the fund does have interesting exposure to proxy construction plays. Like it does not directly go into a construction stock. It might play it through say a cement company or a company that will help build real estate, ceramics and so on. So proxy plays such as those are interesting in the fund.
Great. Let me come to Hemant. Hemant, your top pick is Reliance 200. Top 200. This is a very large fund. I think some 6,000-7,000 crore AUM they must be having, and they have a very wide choice to make from the 200 universe. Why have you picked this fund?
First thing, let me say that, Murali, I think when you're talking about a large cap fund, the size of the fund does not really matter, because liquidity is not an issue in large cap stocks. The reason why I like this fund is, I think, one, it has a established track record of more than 10 years. The second is, it has a very well-defined investment universe. It basically invests in the company which are a part of 200 in terms of market cap.
Sure.
If you look at the fund performance, it's been very consistent in terms of performance vis-a-vis the benchmark as well as the peer group. And I think one of the key factors why the fund has been able to do very well over a longer period is the stock picking ability of the fund manager. It's being managed by Shailesh Arbhan, who is a veteran of the industry.
Absolutely.
And if you really look at where the fund is really focusing on economic recovery theme.
Right.
And in keeping with that is basically investing in the companies which are sector leaders.
Sure.
And apart from that is also, making tactical allocation to all those companies which are, high quality alpha generator.
Right.
So I think it's all about quality, it's all about consistency and the level of diversification. But to me, I think the size does not really matter, because you have some other funds which are even larger but have been able to perform very well.
Absolutely. But as I can see, they are not going with the market flow. Though some of the stocks they picked have done very well. SBI continues to be their top holding. Apart from that, in most of the stocks, they hold 4%, 3%, 2%. It's very, very widely spread and widely diversified. To that extent, do you think that the rate of return will be slightly lower compared to other funds where they're far more focused?
If you look at this performance, let's say in the last, 2017, it's been among the top performing fund. And clearly what happens is, let's look at who are the kind of investor investing in mutual funds. Somebody who's looking at diversification. I can understand that over diversification in the portfolio may not always work in your favor.
Sure.
But at the same time, as long as you're able to maintain a quality portfolio and you're able to kind of match up to the return that the peer group is giving, I think that is what this fund has been able to do.
Okay. And he has the choice of churning easily, because he has a wide basket to choose from. Some 200, 300 stocks is what he's looking at.
But that's a defined universe. It's not necessary that he's investing in all 200 companies.
Yeah, no.
It really helps as a fund manager
to move around,
the flexibility to
move around.
Okay. It can go against you also at the same time. But obviously then you depend on the ability of the fund manager to do the right things for you.
Absolutely. So a very interesting combination of large cap funds from both Hemant and Vidya. Our next category of funds for 2018 is our multi-cap funds. Multi-cap funds recommended by Hemant are Motilal Oswal Most Focused Multi-Cap 35 Fund. It's a regular plan that you have chosen. IDFC Classic Equity Fund, Reliance Equity Opportunities Fund, Templeton India Growth Fund, DSP BlackRock Opportunities Fund. And Vidya has chosen Franklin India Prima Plus, DSP BR Opportunities, Motilal Oswal Most Multi-Cap 35, which is a common recommendation from both of you, ICICI Pru Value Discovery, and Kotak Select Focus. Now, of this list of 5 from each one of you, Motilal Oswal Most Multi-Cap is a common one. I'll let Vidya talk about Multi-Cap 35.
Yeah. So, 2016 has been a year when a focused approach to stocks delivered. Especially in the large space, you did not have too much stocks that were, not discovered by others. So the only way you could make returns higher than other funds was to take focused bets on certain stocks. And if those bets gave you, returned well, they, added value to the portfolio. This exactly was the case with Motilal Oswal Focused Multi-Cap 35 also. Of course, the fund does have about a fourth of its portfolio in mid-cap stocks too. So it does generate that additional bit of returns from mid-cap exposure. But its fundamental strategy is like that of a PMS fund. Given Motilal Oswal's, strong PMS parentage, it does build this portfolio like a PMS, where it takes very focused bets on stocks, which are fundamentally very sound, which have growth potential, whose earnings growth are higher than that of the market. And this strategy has delivered very well, because when you take 8% and 7% exposure to individual stocks and they do well, the returns are obviously higher. Now, to talk of the fund's overall performance, although the fund does not have a very long track record like, some of the Franklin or HDFC funds, It has shown high consistency in terms of its performance. Its ability to consistently beat the category average is something that has made us notice its performance. Very interestingly, typically focused exposure means higher risks, especially when the market is volatile. This fund has interestingly shown that it can contain volatility too better, even in volatile markets and down markets. The few down markets that the fund has experienced has shown that the fund actually contained downsides better. Its deviation has been lower than many of the diversified peers. So that's a very sort of a win-win strategy, because you take a focused approach, the focused approach pays well, and in volatile markets, despite a focused approach, your downside is not really bad. So in terms of these factors, the fund has done really well. End of the day, with a focused fund like this, it's not about going sector underweight or sector overweight. It's all top down about the right stock picks. In that too, this fund has had a strategy of picking stocks and also accumulating them at the right time when it's teased. It's more like tactical. Wherever there are market opportunities, it accumulates those stocks, and wherever it's time to prune them because those stocks are inflated, they also book profits. So active profit booking as well as accumulating strategy has really paid off for the fund.
Right, great. So Hemant, you have also recommended this fund. Are you going to look at this as a slightly shorter term kind of horizon because it's focused fund and not necessarily a very long term kind of investment?
No, not really. I mean, look, this is a multi-cap fund which invests roughly around 76% in large cap, 24% is in mid cap. If you look at a combination, I earlier talked about Reliance Top 200 fund, which is a fairly diversified fund. This is a fund which takes concentrated bet. It basically invests in around 25 companies,
right,
and also takes a very concentrated bet even in terms of sector exposure. Okay. So I think as a combination, it works very well. I'm definitely not looking at this fund as a short-term investment opportunity, because I believe that your better of the portfolio has to be a large cap portfolio. Around 50-60% has to be in large cap overall. So I think as a combination of these two funds, I think works very well. You have one fund which is fairly diversified. You have another fund which is actually, even though it's a multi-cap category, but it has a very high exposure to large cap stocks, and the fund has been able to do very well. So I think as a combination, I think it works very well. So definitely worth having for every long-term investor in this portfolio.
Because it's more focused, and the fund manager's ability to keep churning and picking up the best of what is available in different categories, the performance might be better than others, I suppose.
True. See, whenever you look at a concentrated portfolio, it's taking concentrated bet.
Right.
It's not necessary that, because it has 25 stocks in the portfolio, it is not diversified. The stocks are across sectors, but yes, as compared to any other fund, this takes a concentrated bet, surely. That's why you need to look at your overall portfolio. You can't be looking at one fund separately. That's why you must have a combination of a fund which takes a concentrated bet and also take a fund which is fairly diversified.
Absolutely. Okay, that's a very interesting comparison we had. I think it's time now to slip into a short break. On the other side, we will get some more fund recommendations from the two experts, and we will also take queries from mutual fund investors. Please stay tuned. Don't go on. Welcome back to the Mutual Fund Guide. We have been addressing queries from viewers. We will go to the viewers in a while, but we have some more fund recommendations to discuss with our experts. Let's take a look at mid-cap funds. Hemant recommends the following funds in the mid-cap category: Kotak Emerging Equity Scheme Regular Plan, HDFC Mid-Cap Opportunities Fund, IDFC Sterling Equity Fund, Sundaram Select Mid-Cap Fund, and L&T India Value Fund. Vidya has a set of three schemes to recommend: Mirae Asset Emerging Blue Chip, Franklin India Prima, HDFC Mid-Cap Opportunities. I think of this lot, Franklin India Prima is among the oldest, if I'm not wrong. Vidya, go for it.
Yeah, Franklin India Prima, as you said, is among the oldest funds, not just in the category, but in the whole equity space as well. But that's not just the reason why we picked it. The reason why we picked Prima at this stage is it's one of the slightly larger cap mid-cap funds, as in its average market cap is slightly higher than other mid-cap funds. We think that is a slightly prudent opportunity at this time, given the way mid and small cap valuations have run up and the earnings have not kept pace to that extent. to be able to find leaders in different spaces, which are not clearly large companies, but are clearly leaders in their own industries, is something that Prima tries to do.
Great. A very interesting combination of mid-cap portfolio that you can find in Prima. I think the other interesting fund that's coming across today is the Kotak Emerging Opportunity Fund. What kind of emerging opportunities does the fund manager identify here?
I think the reason I like this fund, one is that it's fairly diversified in terms of number of stocks.
Yeah.
It has around 60 stocks in the portfolio.
Yes. Yeah.
Now, considering the fact that mid-cap as a segment can be very volatile, I think the level of diversification is very important in terms of the number of stocks as well as across sector. This fund again follows the theme of economic recovery. That's why it has a very high exposure to sectors like finance, capital goods, and it has auto ancillary. Okay, so these are the sectors which have high exposure. Another interesting aspect of this fund, basically what it does is looks at organized player in the industries which are has high level of unorganized sector. So clearly what happens is post GST, you will see that organized players obviously doing much better than other players. So I think this theme will play out very well going forward. And so I believe that in the mid-cap fund category, this is one fund that investors should look at.
Excellent. So interesting combination of portfolio here. Their maximum exposure is to IndusInd Bank, and it's just 3.3%. That's their top holding. And across holdings, it's 3, 2, 2.5, 1.5. And the combination is very interesting. They have picked up IndusInd Bank, Schaeffler India, Atul, RBL Bank, Ramco Cement, Solar Industries. That's the kind of combination. Looks like, again, this is one fund where the potential for being multi-baggers would be there, I suppose, in some of these. They are all growing companies.
It is. They're all growing companies, but of course, look at the level of diversification because exposure is not very high. So you may not get the full impact of it. But I think it's very important when you look at the level of concentration in this fund and compare it with the peer group. You will see the level of concentration is much lower there. So I think, like I said, there are around 60 stocks in this portfolio. So considering the fact that this segment can be quite volatile, I think the fund manager has kept that in mind, has given you good funds, good stocks which have the potential to do very well. At the same time, is not compromised on the level of diversification.
Yeah, and I think with 60 stocks and very well diversified, I think the fund manager will have the opportunity to get in and get out and catch the best of the time in all those things. There must be a little bit of timing also he can play around with, because it's so well diversified. If he doesn't like X stock and he finds that it's already given him 30%, he has the option of exiting without really disturbing the portfolio.
He has that, and of course, if some of the bets do not play out the way he envisages, then the impact on the overall performance is not so much.
Not so much, absolutely right. So that's very interesting. I will now move to the small cap funds. Vidya, you don't want to be recommending small cap for obvious reasons. You've said that small caps are risky and it's tough to go. So I will focus on what Hemant has recommended. Hemant has recommended HSBC Mid Cap Equity Fund, Franklin India Smaller Companies Fund, HDFC Small Cap Fund, Sundaram Smile Fund, and Aditya Birla Sun Life Small and Mid Cap Fund. One of them sounds like a mid-cap fund, HSBC. Why is that?
Well, the name is actually HSBC mid-cap fund,
but it is not.
It has exposure of around 70% to the small-cap stocks and 30% to mid-cap. And while I totally agree that this, segment has done very well, the funds have done very well. That's the reason you see many of the small-cap funds have actually stopped taking money or restricted the inflows there. So one has to be very careful in terms of exposure. But I always believe that small-cap fund will always have a place in your portfolio. It depends on what stage of portfolio building you are. If you're someone who's experienced, already built a large portfolio and are looking to kind of increase exposure to these, so definitely there is a place for these funds. But of course, you have to be careful in terms of level of exposure you have. And the reason why I like this fund again, this has a quality portfolio. As I said, around 70% is in small cap and 30 in mid cap. So there is a flexibility in terms of changing the allocation in case that it doesn't work out very well for the fund manager, and it basically follows a bottom-up approach. And because the fund still believes that the valuations are attractive in certain stocks, relative to their earning growth. So clearly there are opportunities over there. I mean, we've seen that in the last 1 year. Some of the funds have stopped taking, money or restricted the money inflows, but this segment has continued to do well. And I'm not saying that you can expect a similar kind of return in 2018, but I believe that definitely there is a place for these funds in the right proportion in the portfolios.
Absolutely, great. So we had a combination of different categories of equity funds recommended by both Vidya and Hemant. Let me now go across to viewers who are calling in. Ajit Pawar is on the line from Mumbai. Ajit, what's your query?
Hi, my query is I was investing in SBI Gold ETF fund, and I had invested since 2014 till 2017 starting. The total valuation should be around 2.1, 2.2. But today this entire fund is into losses, which is giving me losses approximately around 30,000 to 40,000. So should I keep this fund as it is, or should I pull it out my funds and invest somewhere else?
Yeah, let me take this to Vidya. It's a gold fund. What should he do?
See, it depends on why you hold a gold fund for. So if you're holding a gold fund because you want to invest in gold and you want to encash it later as a proxy to gold and use it for some purposes of buying jewelry, etc., you should just continue to hold gold. It's not so much to do with the fund being bad. It's more to do with the category not performing well. In which case, if your purpose is to hold gold, you may. However, today there are better options of investing in gold, which is gold bonds. Today, because of the interest that the government gives on these bonds, apart from the price capital appreciation that you will get on gold bonds remains a superior option compared with any other option available today. So if your intention is still to be in gold, and you do not mind booking out losses, you should certainly consider gold bond or take fresh exposure to gold bond. If your intention is not to be invested in gold, you just bought it because you thought it was delivering well, etc., I think you should, and you're a long-term investor, you should consider having a regular equity fund, which is the better way to build wealth.
Okay, I hope that answers your query, Ajit. We have one more viewer calling. Manoj Tiwari is on the line from Mumbai. Manoj, what's your question?
Yeah, thanks. First of all, thank you very much, Btvi, for giving me an opportunity to ask the expert. So my question is that I've got one SDFC mutual fund, which I am running having since last 8 years. Now I wanted to invest 4,000 to 5,000 per month as a SIP. I bought one fund which I wanted to invest in Mirai Asset Emerging Blue Chip Fund, that is regular direct. So I wanted to invest around 3,000 for 10 to 12 years. So I wanted to ask, is this fund is the right one that can give me what I want? And second thing, I wanted to invest in one or two more funds. Which one will be suggested?
SDFC Top 200 is again a large cap oriented fund.
Yeah.
Having invested in one, I think he can definitely consider this fund, Emerging Blue Chip Fund. This is again one of the funds which has restricted the inflows into, into this fund now. Yeah. It is restricted to 25,000 per month on a particular day on 10th of the month. Oh. So he wants to invest 3,000 to 4,000 rupees. So I think he can definitely invest in that. And since he has a longer term horizon, he can. But of course, as we discussed earlier, this is a segment of the market which tends to be volatile. Considering the fact that he will be investing on a monthly basis and for the long term, I think the volatility is taken care of. But like I mentioned earlier, I think the proportion of exposure to such segment is very, very important. So I'm assuming that he started investing in mutual fund, and he's also talked about some other fund that he wants to invest in. So maybe there I would say that large cap oriented multi-cap fund, we talked about some Kotak Select Focus or Motilal Oswal Most 35. He can look at that. I think that will balance out his portfolio in terms of risk and reward.
Okay, we have a mail from Debrishi from Bengaluru. He wants to know what is your view on Principal Balanced Fund, ICICI Pru Balanced Advantage Fund, Franklin India Balanced Fund. He also wants to know if making a lump sum investment is a good idea in today's market scenario. Vidya?
Yeah. So, the three funds that you mentioned, two of them are pure balanced funds, that is Franklin India and Principal Balanced, a balanced fund. ICICI Pru Balanced Advantage is not a pure balanced fund because it also uses some derivatives. So it's lower in risk compared with regular balanced funds. Both Franklin and Principal are above average funds. But if you are investing afresh and you don't already hold these funds, I would recommend better funds like HDFC Balanced and L&T India Prudence, these funds have scored in terms of superior consistency in delivering over several market phases. And they have also contained downsides better than the two funds that you mentioned. The third fund, ICICI Pru Balanced Advantage, is a good fund in its category. That is a category which uses some amount of equity, debt and derivatives. There it has delivered very superior risk-adjusted returns. If your time frame is shorter, then you can go for a lump sum in ICICI Balanced Advantage alone. When I say shorter, if you're going to hold for the next 2 years or so, ICICI Balanced Advantage is fine. Otherwise, you don't even need to hold that fund for the long term. You can simply go with the other balanced funds. With the other balanced funds, it is a safer bet to do a SIP over the next 12 months given where markets are. With Balanced Advantage, you can consider lump sum.
Okay, you can consider lump sum in Balanced Advantage. We had a very interesting session of a bunch of funds recommended by our expert guests. But do remember that mutual fund investments also carry risk. You need to go back and check with your financial advisor before you jump in. Be sure that what you are selecting is the right choice for your risk and for your requirement before you jump in. As I said, there are hundreds of schemes available for you to invest. That's all we have for this on this edition of the Mutual Fund Guide. Keep watching Btvi. News and updates continue on the other side.